Hello, can you hear me? Good afternoon. Can you hear me? Right, okay. Right, good afternoon. Now, we discussed past periods, the income tax. Now, there is a income tax, a direct tax. There are two types of taxes implemented in Sri Lanka. One is direct tax and other one is the indirect tax. Last session I described difference between the direct tax and the indirect tax. In theoretically, in direct taxation, economic and legal both incidents are passed to the person to whom the taxes is levied. But in indirect taxation, the difference is that the legal incident is part of the person who collects the tax, and economic incident is passed to the person who consumes the goods and services. In that case, it is very, very clear that in indirect taxation, the person who consumes goods and services are paid the taxes. Only legal incidents are gone to the person who register for the VAT, and therefore the value added tax registered person cannot claim that they are paying taxes. Only they are agent for the revenue to collect the taxes on behalf of the government, and they are collecting revenue. And for that purpose, there are certain rules have been introduced under the Value Added Tax Act. All the rules and regulations contained in the act are only to the person who has registered for the value added tax, not the consumer. Though you and me, when we buy and goods and services and consume, we are paying some price for the goods or the services. But we know the price is included the value added tax portion also. But still we can't say we are the value added tax payers for the government. Actually we are paying tax, but the value added tax is collected by the person who registered for the value added tax and remit the department. In up to the in Sri Lanka in 1932, tax department was established. For that, only for income tax was collected. Then we introduced the capital gain tax in 1957. All are the gift tax also introduced. All are direct taxes, but no any indirect tax system in Sri Lanka. Then in 1963, the British rulers and also after independence, the local rulers of this country had wanted to raise more revenue within the country. For that purpose, they also thought about imposing indirect taxes. For that, after analyzing the country's situation and the market condition, also the attitude of the people and also volume of transaction, all the policy makers decide to introduce the indirect taxes. The indirect tax, like the first indirect introduced in Sri Lanka was business turnover tax in 1963. Always, as I explained, in value added taxation and the indirect taxation, the taxes are added to the price and the consumers are paid, and therefore always in the indirect taxation, price level of the goods and services are gone up. But any indirect tax is imposed, the person who registered the tax, he added it to the price. The final consumer have to pay the tax, and they have to bear the tax portion. In 1963, in Sri Lanka, business turnover tax was introduced. The business tax was introduced not under the Business Turnover Tax Act, under the Finance Act, but later the separate act was established for the impose the business turnover tax, that is the business turnover tax. But always in that business turnover tax, each stage of the value production and distribution chain up to the good is passed to the final consumer, each and every stage the tax is added to the price. If it says, as I very clearly says, the raw material supply, manufacture. In my illustration, I have shown 5 chain of the production distribution chain. Good is passed to the retail dealer is passed to the goods to the final consumer. In some cases, 5-6 steps are come to the in the process of the goods and services passed to the final consumers. In this production and distribution chain, in each state, the tax is imposed, price is gone up. That is we call cascading. The person has to pay again. Since in the first stage the tax is added to the price, the purchaser has to pay full amount. His cost his cost consists with the taxes. Again he imposed the taxes. Then means tax is added for the tax person even, and the tax is paid tax on tax. In this turnover tax indirect taxation process, and the production and distribution process of goods and services till the goods is passed to consumer, each and stage the taxes is added to the price. That means in his cost is included the taxes also. That amount again, the same amount is again the tax is imported. That means always tax amount also tax again and again. To eliminate that type of distortion, since under the turnover tax system, cascading that type of tax on tax effect is there. That is normally we call the cascading. To eliminate that type of cascading, the policymakers thought to introduce the value-added tax mechanism. In this illustration, I have clearly explained how the price level is gone up and effect of the government revenue for all those two situations. Again, for the theoretical part, if some in the taxation is gone far in the loan periods, but value-added system, tax system, if someone asks who invented this value-added tax mechanism, we must have an answer. There is a gentleman called Maurice Laura. He was in the France. He was the joint managing director of the France tax authority. He invented the value-added tax mechanism. But prior to that, even value-added tax mechanism was there in America, in British. They have implemented in 1988. America implemented the value-added tax mechanism, but there was not the formal value-added tax mechanism. But still, they try to eliminate the cascade through their indirect tax system. However, in 1954, the Maurice Laura, he invented the value-added tax system, and he clearly explained how to collect the value-added tax to eliminate the cascading effect. Then we know the Maurice Laura is the person who invented the value-added tax mechanism. He was the joint manager of the France tax authority on that period. Now in world, more than 160 countries adopting the value-added tax mechanism. Right. Now let us see. Now in Sri Lankan policymakers had also wanted to deviate from the business turnover tax from the value-added tax mechanism. But from 1963 to 1998 in Sri Lanka, business turnover tax system was implemented to collect the taxes. That is the indirect taxes. Then policy under that tax system, as we explained theoretically, the prices are gone up. In order to eliminate the cascading effect and also the price gone up, the policymaker thought to introduce the value-added tax mechanism. For that purpose, our team of tax officers from the tax department and also the Ministry of Finance visited the New Zealand Tax Authority, and they studied their goods and services tax system, and they introduced the value-added tax system in Sri Lanka. In the generic name of this tax is value-added tax. Some countries this tax is labeled as the goods and services tax. Though the goods and services or the value-added tax, same theory is applied, same taxes. In Sri Lanka, in initial stage, under the name of goods and services tax, the taxes was introduced in 1998. But the act was passed in the 1996. The Minister of Finance announced the date as 1st April 1998. For 1998, in Sri Lanka, the Goods and Services Tax Act was implemented, and that means the value-added tax mechanism was introduced. But later, once the government is changed in 2002, they had want to change the name of the taxes, but same tax mechanism. In 2002, the Goods and Services Tax name was changed to the value-added tax. Now in Sri Lanka we have the Act number 14 of Value-added Tax Act number 14 of 2002. From 2002 up to 2016, there are no more than 14 amendments. Each and every year, Minister of Finance made some changes to value-added tax. All the changes introduced through the value-added tax amended acts. Before the 2002, there are the other tax called the national security levy also abolished. During the year, we all know that during the war period, government had want to collect more revenue to meet the requirement of the defense. For that purpose, government introduced new tax called national security levy. That is also the indirect taxes. That tax also added to the price. Always the consumers had to pay the tax once they consume goods and services. And then in order to simplify the tax system, also the indirect tax system, the government introduced the value-added tax. Then under the Act number 14 of 2002. The main feature of that system is to tax the value addition of the goods and services with view to avoid the cascading effect, that is the tax on tax. An earlier illustration, again I am going to highlight to this is in the value-added tax system. If someone is talk about the indirect taxes, always they call if we talk about the indirect tax and also call the business turnover tax, value-added tax, people, the policymakers and all the others talk about the cascading. The tax cascading, literal meaning or the simple meaning is cascading. But again, I want to highlight this, explain this one. See this, each and every stage under the sales tax mechanism, 10% tax of, see the raw material 7,776. Manufacturing stage 10,864. The wholesale stage taxes, see all these amounts have gone to the cost of the retail dealer. That means that when he added to the tax of 18,000 means he considered his taxes included the cost of the taxes included in this cost. That means all these 7,700, 10,000 and 14,000 again tax at the rate of 10%. That is the tax on tax means, right? To eliminate that one, we introduce the value-added tax mechanism again. See, in this system, each state, the cost is reduced. See the 50,000, 70,000, 90, is the same example. The cost is always gone up. Here, since his cost is not include the taxes paid. That is the theory works. Theory works. See the cost is not include any taxes paid. Why? He can get the tax credit for what the tax paid when he purchased the goods. On that basis, the cascading effect is eliminated through the value added tax mechanism. Again, as the Inland Act is administered by the Commission of Inland Revenue, the Value Added Tax Act also administered by the Commission of Inland Revenue. But in India, the direct taxes is collected by the direct tax department and other indirect taxes is collected by the indirect tax department. There are two revenue authorities in the India for the collecting taxes. The indirect tax department collect in India the duties also collected by that department. But in Sri Lanka, there are three main revenue agencies. One is Inland Revenue, other one is Department of Custom and the Department of Excises. Only the Department of Custom collect the custom at the point of import. The Excise Department is collect some taxes from import and also certain type of manufacturing of goods. The the Department of Inland Revenue, they collected some indirect taxes and also the direct taxes. So there are the imposition of tax. As we learn in the Inland Revenue Act, the income tax shall be charged on the person basis on the year of assessment, profit and income, the year of assessment basis. The schedule is specified in the rates is specified in the schedule. And on that basis, in Sri Lanka, the person who is having the income of more than 500,000, the source of categorized under the Inland Revenue Act, and such income within the 1 year of periods, and profit taxes has paid to the per individual on the progressive rate of 4% to 24%. In corporate is taxes up to 28%. The Inland Revenue Act always called the person. The tax shall be charged from the person. But here there are four charging provisions in the VAT Act to impose the tax on the following. In the Inland Revenue Act only for one provision, charging provision, but in the Value Added Tax Act, the time the government had wanted to increase the scope of and also the tax base of the value added tax. In order to collect more taxes, they changed the scope of the imposition also. The VAT on supply goods and services taxable activity. All this we will explain what is the taxable activity in all. The VAT on import of the goods. See, in very recently, VAT on finance services also VAT on finance services also imposed. Other one is optional VAT only up to 31st March 2010. That type of the government time change its position to widen the imposition scope of the value added tax. Now, normally in the value added tax is charged only for a person who has engaged in the taxable activity and whose turnover is exceeds some certain level. See, these are basic conditions for the chargeability. For the chargeability, what the following conditions should be prevail. The taxable activity should have been carried out in Sri Lanka. There must be taxable activity. We will learn later what is the taxable activity and all. For all this purpose, again, the value add tax we are not going much explain, only for 3 hours were allocated for this one. The Value Add Tax Act also had the definition section. That definitions are more very important for the students. They have to see if any word is not so clear, he has to refer the interpretation section. Then he can get the full idea of the meaning of the taxable activity. The act simply says the taxable activity. But according to the Inland Act, the Value Add Tax Act, the word of taxable activity has been defined in the interpretation section of Section 83. Section 83 is the interpretation section of the Value Added Tax Act. The Value Added Tax Act define the word of taxable act. On that basis, we can easily find the charge. That means by whom the value added tax has to be paid, or to whom the value added tax is imposed. Any person who has engaged in the taxable activity, he has to get the registration for the department and collect the taxes and paid it to, remitted to the tax department. For that purpose, the taxable person has been given impose certain rules and regulations to be followed in the process of collecting taxes and also issuing tax invoices, paying taxes, furnishing of return and all this process. The word taxable activity is very important in the subject of value added taxation. The taxable activity, the word is defined as the taxable activity means only for these come to the taxable activity. I'll little explain. Any activity carried on as a business. The main thing, the activity must be carried on as a business, trade, profession or vocation. Other than in the course of employment or every advantage concerning the nature of trade. If someone is doing something not for the business or the motive of trade, that type of do not come to the definition of, does not come to the definition of the taxable activity. Any person who has doing something as a business or the trade or the profession or the vocation, but employment is not not come to the definition of the value added taxation. The other one is the provision of facility to its members or other for consideration and payment of subscription in the case of club, association or the organization. Then we learn in the income taxation also, the club also doing business when their income is coming more than less than the 3/4 of its members. If the revenue is come from more than 3/4 of its members, normally we saw club is not doing any business. Likewise, the same definition come to the value added tax. Also, if the club also doing a business, assuming that, for example, they are running a restaurant or they are renting their building or the ground for the others and collecting some money, that is also come to the definition of the taxable activity. Anything done in connection with the commencement of cessation of any activity or provision of facilities referred to A and B. See, in the A and B both says we are doing the business, even closing up the business, even come to the definition of the value added taxable activity. Other one is the hiring or leasing of any movable property or renting or leasing of immovable property or the administration of any other property. If in this value added tax act is we have uploaded in our department website. Anyone interested for the read all this definition and all, he can access to our website and download the value added tax act, and all the amendments also we upload to our website. Anyone interested in get the more knowledge on taxation, access our website, department, Inland Department website, and learn more. Other taxable activities, the exploitation of any intangible property such as patent, copyright or other similar assets where the such assets is registered in Sri Lanka or the owner of such is domiciled in Sri Lanka. Again, here the word is we have mentioned the person who domicile in Sri Lanka. Again, you all must keep in mind the value added tax is a domestic tax. The tax is always import the person who consume good in Sri Lanka, right? On that basis, once the good is imported to Sri Lanka, at the point of import, we import the taxes. As I in my